Hey traders, checking in on the stock market today. Big tech names seeing a little bit of profit taking into the end of the day after leading the way to the upside over the last 4 days. We'll look at the Chinese names getting some daily trend change follow through, and we'll go over my first day trade in a week and a half after taking some time off. IWM bounce. Let's check it out. So the S&P 500 futures chart daily inside bar today, and we started the morning looking at our key resistance level, which we did not break. We had the all-time high. We had the low of consolidation, we failed to break resistance, and here we are heading back down towards support. So if you remember the video yesterday, we were looking at the hourly, and we said, can the bears prove it overnight by confirming an hourly downtrend? The answer was no. We grinded our way back up. Same thing except on the 4-hour time frame. Overnight tonight, can the bears prove a confirmed 4-hour downtrend? If the answer is yes, we will likely see some gap down opens tomorrow in some names. If the answer is no, and we hold this support, then we have a 4-hour equilibrium to be watching into tomorrow. So key support coming into play. And again, just an indication, is daily consolidation coming or not? And if we get the bear break, then we're just looking for SPY to try and form a daily high or low, anything above 446.16, little over 1% to the downside. NASDAQ, 4-hour bull break, but closed right on 4-hour EMA 12 support. So again, looking at QQQ on the daily chart, upper wick of profit taking, bearish reversal candle on the daily, and if the low of today breaks tomorrow, we're going to scout a daily high or low, anything over 371.97. We would need increasing bear volume if we were going to break that daily support level from here. Financial sector, anything above 37.22 is a daily high or low. So the big question that I have over the coming days, if we see big tech profit taking follow through into daily consolidation, does that lead to XLF setting a daily high or low and continued rotation? Again, anytime we're seeing any weakness, I'm scouting for signs of rotation. I'm scouting for a major sector going up, because that tells us if a major sector is going up while the market is pulling back, we're seeing funds rotate into that name. So keeping an eye out for the bulls to try and change the hourly trend. It's been a clear hourly downtrend the last 3 days. New hourly resistance is 38.33. Bulls must confirm an hourly trend change for a daily high or low to try and shape up. Healthcare sector confirmed a daily downtrend, 0 follow through. So we had our higher low set, failed to break the all-time high, broke support, but bulls bought that dip today, which means zoom out because the weekly consolidation is very healthy and it's a potential bull flag. Have we seen this recently? Yeah, right here. Lower high and lower low, straight into a new all-time high. Doesn't mean an all-time high is coming, but it's a possibility that is on the table. So bears would have to break the low of today for follow through. And that level is 133.97. IWM daily bull flag confirmed, new line in the sand level is 224.33, our new daily high or low. The bulls are keeping their complete control on this bounce. The next resistance level after 228.24 is 229.46. And again, we're about 3% away from the all-time high at this point. So the question will remain, do we see continued rotation into small caps and growth names leading to a monthly bull flag and new all-time high? If we were going to see any kind of red flags, red flag number 1 for the bulls would be a loss of the daily uptrend. So checking in on our growth names, the biotech sector has been on absolute fire. High or low every single day for the last 9 days. No daily consolidation. We went straight from the double bottom at monthly support into over a 10% bounce. And again, there were a couple little catalysts there. The PFE buyout, the growth sector bounce, IWM certainly helping. And now 141.50 is the major resistance level from here. That's where the original bounce topped out. But when I look at correlations, so I can see that IWM and XBI are very similar on these daily bounces. The low was August 19th, and we're at the high of the bounce today. XBI, the low was August 19th, and we're at the high of the bounce today. There's some little differences in there, but again, I want to know who's stronger, who's weaker when I'm watching correlations. XBI is clearly stronger. Why can I say it's stronger? It closed up at the high, and it has not seen any daily consolidation, while IWM has seen 2 little bull flags form. So those are differences that tell me XBI is stronger. I can also look at other names showing me weakness. Penn, PENN, doing the same thing, very strong, bullish correlation, the entire bounce. But look at today. So Monday, gap up open, a very small gap up open into a red day, and then a pullback, breaking the pattern of a higher low every day. IWM, same day, tiny gap up open, there's your red, there's your pullback for daily consolidation. The difference is IWM confirmed a daily bull flag today, and Penn failed and closed fairly weak. So today is the first day that Penn has seen a bearish correlation with IWM. Does that mean it's going to play out? We'll have to see. We have to pay attention because every single day we get new information. But if Penn drops down and breaks $80 here, it's a failed daily bull flag into further consolidation. So it's just first little clues. And that's how I use correlations. XBI is stronger than IWM. Penn starting to weaken comparative to IWM. So if IWM were to be red tomorrow, I would anticipate that Penn would very likely break $80. Other growth names, saw some upside. TAN, the solar sector, a little bit of green, but closed fairly flat. ARKK had solid continuation. It's coming up to key 126.25 resistance. The MJ sector fell on its face. So it's important that you don't develop a bias and that you can concede. So I want the MJ sector to go up. I've been watching for the shift. We got one day of shift, and that is not enough. When you're coming from a prolonged downtrend, you need to stack days on top of each other to put pressure on shorts, to cause shorts to cover, to entice bulls to buy in. One day doesn't do it. So today was a very important day, and I described that in the video yesterday, how it needed to be like these 2 days because this was a very similar range to here. Here's the similar range, upper wick on this candle, upper wick on this candle. Back then, we followed through. Today, we hard rejected. So this is the kind of day where as a bull, I have to tip my cap to the bears and say, congrats, you nailed it. You had a great defense because you broke resistance by 1 penny and that marked the low or the high of the day. And everything changed from that point forward. And just looking at other sector peers, ACB rejected from its high of yesterday by 2 pennies. Bears played great defense. And it was the kind of scenario where I'm watching IWM correlation. And IWM was dropping on the morning. And I've been watching the correlation with the MJ sector and IWM recently. And the MJ sector was going up. 10 minutes of a very strong start, a little bit more than 10 minutes. And IWM, 30 minutes of dumping. So I was live streaming, watching IWM, and I'm saying, okay, MJ, here are our key resistance tests. MJ bulls are positioned very well if IWM can bounce and get this 5-minute oversold bounce going, because we were oversold from the first candle on the day. And we get to here, and I'm saying the same thing, and we get to here, and we get to here, and I'm saying bulls are positioned well if we can get this IWM bounce going. The problem was bulls could not get the IWM bounce going, and we had another 15 minutes of downside. And what that allowed for is a rejection from resistance and then very convincing rejection. Again, it's not your 382 retracement trying for a bull flag. It's a very hard rejection with a significant enough retracement that you know a lower high is then the most likely scenario, keeping the bears extremely comfortable. If IWM had bounced within the first couple candles of the morning, in my opinion, the MJ sector would have broken that resistance. Who's to say how much follow through we would have gotten, but we would have broken the highs of yesterday, in my opinion. But the IWM bounce didn't take place. So we rejected from resistance, and bears won the day convincingly because from that point forward, at no point did bears have anything to worry about. Look at just 15-minute lower highs, every bounce attempt, and a close near the low of the day. So right now, the MJ sector, we're looking at this and we're saying, here we go again. Bears have complete control. And it's a confirmed daily trend change with 0 follow through, which means zoom out and look for a potential weekly bear flag. That's a possibility to be on the table. A red flag was the fact that CGC never broke daily resistance. It stayed in a downtrend after the rejection yesterday, and here we are looking back towards the lows again. So today was a big fail, and I will exit my MJ swing positions from this past Friday if we see the recent lows break. So congrats to the bears. There were some nice top fishes there. And Lori on our pregame live stream, speaking of which, you should be watching pregame with Lori free on this YouTube channel because she was pointing out the TLRY top fish and a handful of people nailed it. Chinese names, K-Web, leading the way. So K-Web and Baidu, we saw, were stronger than Baba. Daily trend change and follow through. Watch for the shift from fear to FOMO. Look at Amazon on the daily. Fear, FOMO. So now, whenever I'm looking at a longer term shift, as I mentioned in the past, I want to know how many weeks of bears are now underwater. So I can look at this and say, okay, well, anybody that shorted K-Web in the last 5 weeks is now underwater. And every leg up that we see, a longer time frame of bears being underwater adds to buying pressure of shorts covering their positions. So confirm daily trend change. We zoom out and I'm watching weekly resistance now. Anything under 71.47 is a lower high, but the first level that I care about is the EMA resistance after all these rejections, and that's coming into play in the upper 55s. Bulls need a big enough bounce on the weekly to create the space for an eventual weekly trend change. We did it on the daily, and now the bulls have to do it on the weekly. We're not going to top out on this bounce until we lose the daily higher lows, and the bulls have a lot of space, anything above 47. Solid day. Baidu, same deal. Daily trend change, look at the volume. Convincing bull volume. The bull volume is outweighing the bear volume on this drop. At least the big green days are outweighing the big red days volume. So the weekly bounce is underway. I would consider, we have a resistance here at 169, but I would consider anything under 209.17 a weekly lower high. Can the bulls bounce significantly enough to create the space for an eventual weekly trend change to take shape? Bulls want to keep that daily uptrend as long as possible. Baba, double top. Again, it's the weaker name because of the size of this retracement. But if we can get over 174 more convincingly, it'll be a confirmed trend change, and it will try and act as a laggard to the stronger names. And again, just looking for a weekly lower high under 203.28. Baba has a lot more work to do to try and see the same strength. And now I'm curious, what do our percentage bounce looks like? 14% versus K-Web. Yeah, 25. Oil. Lost the pattern of a higher low every day. Really nice 4-hour equilibrium broke bear on the inventory report reaction. But plenty of space for a daily higher low. Now the question is, can the bulls confirm the daily trend change, which would be step 1 for a monthly higher low to try and form? Wouldn't be surprised in the slightest if we form a monthly inside bar this month because we're right in the middle of a very wide range from last month. Look at that straight line. Nailed it. So, bulls need to confirm the daily trend change. Watch the retracement. The more we pull back, the less likely the daily trend change will be. At this point, it's less than 382 retracement, which favors a daily trend change. If we drop down to 50% plus, we then start to favor the equilibrium. Natural gas bulls on fire. Weekly bull flag confirming with huge follow through. Daily broke support by a penny straight into a big breakout. In the past 2 days, it doesn't look like much. That is a 10%, 12% move on natural gas in 2 days. This has just been a monster off those lows. And we're now testing 7-year highs, and my natural gas tank is running low. So I'm about to be paying a lot of money. 4872 is the level, big picture, long term. I do expect there to be some bears attempting a rejection from that level because we are so extended. Look at the monthly RSI. Look at the monthly RSI. Historically speaking, 72 we top out, 69 we top out, 73 we top out, and here we are 71. Coming up on resistance. That's going to be very fascinating to observe over the next couple months. So another thing I want to point out here is this is an ode to experience. So I'm referring to me just sitting down at the computer midday and saying, okay, big tech has been running really hard since Friday Powell. Just straight up monster moves in a lot of these names. And we know daily consolidation is going to be inevitable. And so that just gets me thinking, okay, I'm keeping an eye out for consolidation in big tech and watching to see where that money is going to rotate to. So just as an example, 12:19 p.m., keeping an eye out for big tech to take a breather into daily consolidation and watching to see where the rotation goes from here over the next few days. Certainly no sign of it now. So there was nothing on the chart aside from knowing that we've run the last 4 days, but there was nothing on the chart telling me bearish at that point in time. That is gut and experience just saying, and again, it's not even saying, look at this call. It's saying that's a gut feeling that you want to develop over time through experience. And even if I don't act on that bearish, even if I'm not entering bearish positions today on big tech, that can help me from entering bullish positions. Maybe I'm not buying short-term pullbacks because I'm anticipating bigger picture daily consolidation. And so at that point in time, what was that? Just after noon, here's Amazon when I posted that 15-minute consolidation, no red flags whatsoever. So that gut feel of experience can either have me scouting a bear play if I'm looking to be real aggressive with either a top fish at the double top or a bearish entry on the 15-minute downtrend confirming. But again, even if I'm not looking bearish, it can keep me out of losing bullish trades. If I try and buy Amazon 5-minute oversold conditions into the end of the day, I get worked. But knowing that we're due for daily consolidation after going up every single day for 8 or 9 days can prevent me. It can be a money saver. Even if it's not a money maker, it can be a money saver. And so we have some of these big tech candles. Again, that's the most bearish candle on Amazon this entire bounce. Apple is a bearish reversal candle after a new all-time high today. Significant pullback from those highs. Right at about noon, a little after noon is when they started accelerating to the downside. Google profit taking into the end of the day. So again, just knowing that we're not going to go forever and we're due for healthy daily consolidation can have us watching the shorter term signals for that bigger picture, more likely scenario. And again, I wasn't saying we're about to pull back. I was looking at something over the next 2 days, but then developed shortly after that as to seeing that profit taking and set up for potential daily consolidation. So the trade review today, IWM, made this trade while I was live streaming. And again, first day trade in a while. So nice to just get back into it. And again, it was the 5-minute oversold conditions. And we were initially rejecting from this 227.35 resistance. But on this dump, the 5-minute RSI was down in the teens. And the 15-minute RSI at that point was down in the low 20s. So, okay, I'm interested in a bounce because I know IWM has been a lead bull over the last couple of weeks since our SPY fear reset on that brief consolidation. So I entered my first position, 225.60s. I said, all right, I'm going to enter another position just above 225 is what I initially said. And then as soon as we saw this little bounce here, holding 225, I said, I'm waiting for a break of 225 if I'm going to add a second position. Because that short-term little bounce, it cools off short-term RSI levels. My most confident bounce trades are when all these time frames are lining up oversold. I want as many as possible. I want 15-minute, 5-minute, 2-minute, all oversold on this play. Other times I want daily, hourly, 15-minute, 5-minute. But in this one, it was just those three. So this 2-minute cooled things off, and then we saw another leg down. Why was I still interested in the trade? Because we never cooled off 5 and 15-minute RSI on that weak bounce attempt. So first position, 225.60s. I said next position I will enter if 225 breaks. I entered my second position. Those are the only two positions that I want on this bounce trade, which means as soon as my second order fills, my stop loss goes in place. And I'm not playing off of support, I'm playing off RSI. So my stop loss has to be based on a dollar amount that I'm willing to risk on the trade. So I entered my second position, 225 we'll call it. My average is 225.30s, and I placed my stop under 224.50. So I was willing to risk 80 cents to the downside. On the initial bounce on the 2-minute time frame, I said, okay, well now I'm in a full position, so I'm going to take some off in profit to lower my break even. But not only does it lower my break even, it gives me that cash back and it gives me more flexibility. No longer am I in a position where I can't add anything. I am in a position where I have a little bit more flexibility to stay in control of the trade. So on the initial bounce, I took profit, I forget where, probably 225, 50s and 60s again. And so that dropped my break even after selling half to 225.10. So now my break even is 225.10, and I put my stop under the low of the day and I let the bounce play out. I say, okay, let's see if the bulls can change the 5-minute trend. I have very small risk. If I stop out, I'm risking 25 cents. And if we follow through, then my potential reward is multiple times 25 cents. You know, it's 50, 75 cents. So I let the 5-minute trend change take place. And then at that point, I had to meet a contractor in the driveway. And so I just said, I'm going to walk up my stop for every 2-minute high or low. I'll stop out when that pattern breaks. And so I walked up my stop. I put it here on the second half of my position, and then I put it here, and that's where I stopped out. So 226, we'll say 226.40s is where I stopped out. So average of 225.10, risking 25 cents on my half remaining position, and locked in 5 times what that risk was. And in the end, it wasn't, a huge win. It was a solid day trade win, and definitely left money on the table where we set a 15-minute higher low and then saw continuation. But I was off the computer during this period of time, and I'm A-okay with how it played out. So trying to get back into the flow of things, and that's just baby step number 1. All right, I hope you're well, do good things, and we'll check back in tomorrow. We'll see if tech sector gets some further consolidation.
Some squirrel planted corn. Ants got that one, they can have it. I think this is some kind of Chinese pea. It's a winged something, but I really like its flowers. Never grown it before. Slug walking across an ant line, but I think he's gonna be safe. He's eating this fungus.